Good morning, MMTs. Today's date, 9/15/2012, time 7:26 a.m. Pacific Standard Time. What do we have? We have the CRX Morgan Stanley Commodity Related Index. We covered this before QE3. It was in a bear for most of calendar 2012. This particular trade, unlike other times in 2010 where the ripping bull was in these commodities, that's back when we had QE2 injected back in the fall of 2010. And QE3 has been the biggest monetary policy statements of buying back $40 billion a month of mortgage-backed securities, not to mention many other things. And what ends up happening when the Fed does this kind of stimulus is this side of the market, which was a bear, and it had been a bull for many years, and then it went real bad in the calendar year of 2012, and all of the individual names, like the FCX, which we did. And I'm going to compare that FCX exactly with this Morgan Stanley CRX. This yellow line is called 100-week moving average. And we already featured the live video here. But what I wanted to do was I wanted to show you how the leadership in this sector, that's called FCX, that's the leader stock here now, and those are the ones we trade, but the charts are identical. So the names that have been in long-term multi-year bears with the FOMC QE3 injection will put these names back into longer term. Longer term in this case means that as this QE3 gets underway and they're repurchasing, what will end up happening is when that dollar goes down, commodities go up. When QE1, QE2 was done, and Twister now, is that we get leveraged up in commodity related names. And if the US dollar continues to go down because of what the Federal Reserve did last week, that means that this side of the market that has not participated in the calendar 2012 bull market, because of those stimuluses, what ends up happening, my friends, is that we end up paying a lot more in commodities. And people can remember what that was like. We're at all-time highs already in some of these areas as far as food inflation goes. However, for the foreseeable future, the Fed is going to keep rates extremely low until the middle of 2015. This is just the beginning of this commodity-related index. Now, yes, each individual name will deal with the earnings in here and whatnot, but this is going to be the next bull side of our indexes and our broader market as we continue to close out 2012. However, more importantly, is what 2013 will look like. And this particular index peaked right up here at 2011. It went into its bear because we had some problems in there that as the stimuluses started wearing off, these things were out of favor. And they weren't being stimulated and supported. But now that you have the Federal Reserve kicking in QE3 and we're about to get a weekly buy signal, we will be buying using longer term call strategies. And at times when they break out, they'll pull back. But it's the individual names in the commodity related index that will be the bull for 2013 and will make great gains as they pull back, leaving their bear, pulling back into their bull support. You've got weekly moving averages crossing over. You got everything going this way. When the US dollar goes down, even though that worldwide economies are extremely slow, that's a different topic from what QE3 does. Yes, we are slow in all of these names. However, we will continue to build what we call a bull base. And we have all the names in here, and I've been talking about this now for the last couple of months. And we've got positions that have set up that weekly consolidation here. And it's time to get busy and look at the quality ship, or quality leadership stocks that are in here that will pay and have great bull runs looking forward over the next calendar year, 2 years for that matter. I will tell everyone this is the next bull.